You're listening to Talk Radio 1190. I'm John Wolf, and I have a special guest with us today on the Ask the Experts radio show, John Harman, CPA. How are you this morning, John?
I'm doing well. Thank you, John.
And tell us, what makes your tax business special? Where do you really stand out above the others?
Well, I think one of the first things, we're a smaller firm. There's 4 CPAs in the firm. We can provide the personalized service to a client. You know, you're just not a number to us. You know, we take every client and work with them personally. We look at their situation, and we also provide a holistic approach to our accounting. There's a lot of times you have questions about your taxes, but you have questions about your financial aspects. You might have a question about, should I take money out of a 401k? Should I invest in this type of business? What stocks should I invest in, which we avoid. We don't recommend any stocks. But there's a lot of personalized questions that you need somebody to turn to at certain times in a year. There's questions you have outside of April the 15th. And we're always there to pick up the phone and answer questions for you.
That's great. Now, I should mention, because people dive in and out of their car all the time, and especially when it comes to listening to radio, the phone number for your office, 469-742-0283, 469-742-0283, and your website, McKinneytax.com. I want to make sure we got that in there. You were voted Best Accountant in McKinney 2017. You've had 8 years with that stature and running, and you've had other awards. You're on Angie's List Super Saver Award winner. And let me ask, how are we going to be affected? How are your clients affected by the new tax laws that just got passed?
There's been a lot of discussion about the new tax law. There's a lot of myths going around. We've had questions about, well, I'm going to file my tax return this year on a postcard. And that's just not true. The forms are going to be out next year, and also this year. They're going to be very similar forms. They're not going to be cut down. There's a 1040EZ has been around for years. You can use those forms, and they'll still be available. A lot of people rushed out and want to pay property taxes. You know, want to prepay it before the first of a year. There's a lot of news, and people said, "Well, we can save taxes by prepaying these taxes." And I called the Collin County Appraisal District on a Thursday right after Christmas, and I was asking about, you know, should people be prepaying taxes? I wonder what they're doing, what they're telling people. And I asked, have you been receiving a lot of calls about this? She says, yes. The first couple of days we received a lot of calls. I said, well, you're not receiving them now? She says, no, we're receiving calls. How do I get my money back? Because people have paid in, they've listened to the news, they paid in their money to the county, and then they realize it doesn't do any good, and so now they're requesting their money back. In fact, what they're doing is actually making a deposit on the next year's real estate taxes. They're not actually paying the real estate taxes because there's no bill yet. They're just making a deposit, and a deposit's not a deduction.
So it may make them feel good when that time comes to write a check, but they're not accomplishing anything other than giving money away sooner than they needed to, not collecting interest on it, not able to invest it.
Well, then there's a lot of times you don't want to listen to the everything is on the news about the tax law changes, and you need to really dig into the law itself. There's a good example is the Senate bill was coming out in the first part of December, and the bill from the House was coming out. Very different bills. They went in and they were total about 500-600 pages. And then went to committee. And then when it came out of committee, it was 1,047 pages. So everything you was hearing prior to the committee report or the voting on it was different from what actually the bill was. And people were always asking, well, how will the new tax law change? Well, you don't know till it's actually law. And there was some big changes coming out.
Okay, what major write-offs, if any, can you name that got taken away?
Oh, there's a lot of the exemptions were taken away. That was a big one. That you hear on the news about the standard deduction going up to $24,000 for a person filing joint. But if you had four kids, And then you and your husband, you had 6 exemptions. Exemptions were $1,950, $1,950 each. So it's coming out to $11,700 in deductions that you're missing. They raised the standard deduction, $10,000, $12,000, but you've lost the exemptions of almost the same amount. So it's a wash. But all you hear in the news is, the standard deduction almost doubled. It's up to $24,000. Well, that took something away to get you there.
Now, salespeople talk about the elevator speech. If you met someone basically in an elevator, you had 20, 30 seconds with them, how would you sell yourself? In this situation, if you had 20, 30 seconds to just give someone a generic but solid piece of advice for their finances.
Okay. Well, first of all, my office is in a 1-story building, so I don't have an elevator. But if I was going to try to break it down into a short speech, mostly with your individual, there's not really much changes. They might change the bracket and move the bracket from 39 to 37. There's no way to get around this. You prepare your taxes, and what the end result is the end result. They're doing away a lot with the standard. They're replacing the itemized deduction with a standard deduction. They're making some small changes. And for the average person with W-2 income, there's not really much they can do to save money. Make sure they're giving to charity, make sure they're giving a good write-off when they donate to Goodwill or to the disabled veterans. Make sure you're putting a good value on the items you donate. If you donate a sack of clothing, that sack's worth more than $10. And a lot of times people say, well, it's not worth much.
Old clothing.
But, when you put a sack full of clothing in these big garbage bags, you can put $200, $300 worth of clothing in there pretty easily. If a shirt is worth $15 at the Goodwill store, 10 shirts, it's $150 of value. So make sure you take all these small deductions. But the big tax law change has to do with corporations. And you hear about the 20% flow through. If you're receiving a K-1 or you're owner of a business, you can get a deduction equal to 20% of your income from that business. That sounds great. I'm a LLC myself. I'm an S corporation. That's how it's set up. I won't be able to take that 20% because I'm a service organization and I'm over the limit of making $315,000 a year, the taxable income. I'm over that limit, so I'm not allowed the 20% deduction. So you keep reading about and hearing about all these tax benefits. Once you get into the law, they're not there for a lot of people. Doctors, contractors, small business owners, a lot of them won't be able to take this 20% deduction. However, there are ways to get around this. There are some loopholes in the new tax law. One of them, you have to work outside of an S corporation or you use LLCs. You can do a multi-structure process of having your business, instead of being one entity, having 2 or 3 entities, and have part of the money going to a corporation. A corporation's taxed at 21%. You're taxed at 37%. You're going to save 16% in your taxes. And if your tax liability is $100,000, and you're saving 16%, that's $16,000. So there's ways to restructure it. And if you go to many people who are in the tax profession, they don't understand how to restructure this. You need a firm that is forward-looking, that understands the tax law, is more there to help you save money, and not just to fill out a form. We're not form filler-outers. We want to look at your total situation, figure out what's best for you. We can actually set up different types of entities that will help you disperse your tax liability among different entities and actually lower your overall tax liability.
Okay, I want to mention again, we're speaking with John Harman, CPA, phone number for his business, 469-742 0283, 469-742-0283, or on the web at McKinneyTax.com. Now, you mentioned about LLCs and S corporations. If someone's just starting up a business, we always hear America's made of the small businessman. We all have great ideas. Some people go for it. And what would you advise someone who's just starting out as far as trying to protect himself with an LLC?
Well, an LLC, one of the primary purposes of LLC is to protect your assets. This is very important. If you have some wealth is in your home and savings account, you want to protect it. So you're going out and setting up a small business. You don't want to risk everything. You're putting money in. That money's at risk, but you don't want to risk even more money. You don't want to come back and take your whole retirement. So a lot of times people come in and they're setting up a business, have an idea, and they're on their kitchen table creating this idea and say, well, I make great cookies. I'm going to start a business selling cookies. My advice is, yes, you can set up an LLC. We will charge you money to set up an LLC. You don't need an LLC. You need to start selling cookies. And once you start making money and realize, and you're going to be making a profit, we can set up an LLC for you, and we might be able to have the LLC taxed as an S corporation. Or you might go in a partnership and have it set up as a partnership. We can restructure it. But you're number one, you need a business plan to make money. You don't need to be spending money saying you're going into business. Start going into business.
Okay, very good. We'll be right back. You're listening to Talk Radio 1190 with the Ask the Experts radio show. Our expert this week, John Harman, CPA. We'll be right back.
CPA John Harman is proud to be selected as the top CPA in Collin and Denton counties by the Ask the Experts radio show. Harman has been a practicing certified public accountant for over 30 years. He's developed new tax strategies for the new tax law. Harman has a new tax strategy that taxpayers who are owners of an S corporation or receive K-1s over $200,000 or have 1099s over $200,000, significant savings for 2018 beyond their current strategy. You have to act quickly in 2018 to take full advantage of these new tax strategies. His firm offers services in personal financial planning, IRS representation, small business accounting, bookkeeping, tax planning preparation, payroll and accounting services, business plans, and new business startups. John Harman, with his years of experience, can give you peace of mind knowing your business is in good, experienced hands. So see why so many of his clients think he's the finest CPA in Collin and Denton County. Call CPA John Harman today for a free consultation so he can show you how he can help your business or you personally. 469-742-0283 or go to John's website at McKinneyTax.com.
Ever had an obstructed view at a show or an event?
This is so amazing.
What's so amazing? I can't see around this concrete column.
That's what it's like relying on checking your credit to protect you from identity theft. You get a limited view.
She looks beautiful.
Who looks beautiful?
You might detect credit changes, but you can miss threats, like someone getting an online payday loan in your name or selling your personal information on the dark web.
Did you see that?
See what? The concrete?
With LifeLock, you can see more. We use proprietary technology to detect a range of identity threats, and if you have a problem, a U.S.-based identity restoration specialist will work to fix it. No one can prevent all identity theft or monitor all transactions at all businesses, but LifeLock can alert you to threats you could miss.
Told you this was worth seeing.
You are killing me.
Memberships start at $9.99 a month plus applicable taxes. Now get 10% off. Go to LifeLock.com and enter promo code NEWS. That's promo code NEWS. LifeLock. More detection, more protection.
And we're listening to John Harman, CPA, on the Ask the Experts radio show on Talk Radio 1190. I'm John Wolf, and we're talking about some of the new tax laws. How is the mileage deduction affected, John?
Well, the mileage deduction was set up for outside salesmen a lot of times. They were employee business expenses. This is on a Schedule A itemized deduction. Now, the mileage in a lot of these business expenses for a W-2 employee have gone away. Now, you have a business, you have two different choices. You can take what they call actual expenses. You can put the vehicle in the business name, take depreciation, take the gas and the oil changes against your income. Or you can take the mileage. I always prefer the mileage. It's easier to to keep track of. A lot of times you have gas receipts, you put them in your ashtray, your car's being vacuumed out, and all of a sudden the receipts are up to vacuum. So keeping track of mileage is easier, it's cleaner. And people would ask me, well, I'm buying a vehicle and I have this business. I'm going to put the vehicle in the business name, and this is going to save me a lot of money. Not really. What happens if you put the vehicle in the business name, now you're going to have to pay additional taxes each year on that vehicle. Since it's a business vehicle, your insurance will usually go up because now it's a commercial vehicle. So you got two negatives going against you right there. And also when you're using mileage, a vehicle can be in your name and you're using it 40, 60% of the time. You keep track of the mileage, and the company can reimburse you for use of your personal vehicle. It's a lot cleaner way to do it. It's a lot simpler way to keep track of. You don't have to worry about these receipts that go against it. And this is what I recommend, generally speaking. Each case is separate. You look at it, and you make your own decision. Now, if you're buying a van that's suited for rug cleaning, and it's full of, is made special for that, and you have your equipment bolted down inside of a van, that's a commercial van. That's not your personal Lexus that you're driving every day
Right.
to go grocery shopping.
Now, we always hear these commercials, settle your IRS debt for pennies on the dollar. I owed $100,000. I only had to pay $1,000, and I was debt-free. Is that a real type of thing, or what is the true story?
Yes, you can save money. Yes, you can make an offer and compromise. The government wants you to pay them something. They're like a credit agency. They want to receive some money. If all they can receive from you is 10 cents on the dollar, they'll take that. However, there's a big however, you have to show that you cannot pay any more. Most of the time, let's say somebody is 65 years old, living on Social Security, they owe $100,000. The IRS knows they'll never receive that $100,000. They submit the financial statements showing they're just barely surviving, and then you might get 10% on the dollar. Offering compromises is really a specialized field. I work with another CPA here in Dallas area, Jim Matthews. He's very good at offering compromises, and he actually received one compromise. The person owed $50,000, and he actually negotiated down to $1.
That's a good negotiation.
That's the first I've ever heard about. He said that's a holy grail. And the person he submitted to, the IRS joked and laughed at him. He said, you can't submit offering compromise for $1. And he said, we're doing it. And it was accepted. But the person had no assets. They had no money coming in. They could never pay the debt. And it is a situation that's a perfect storm or a perfect compromise in that regard. Now, if you're 30 years old, you owe $50,000, the IRS is going to wait you out. So maybe you're not able to pay this year or next year, but they'll keep your file open, for probably 10 years, and they'll wait and see if you're going to start making money. And once you start making money, they'll want some of it. But offers and compromise, a lot of firms will just take $3,000, $4,000, $5,000 up front, maybe file the offer and compromise, and just let it go from there. I think one of the statistics was only 10% of the offer and compromises are accepted. You can go out to the IRS website, and there's a questionnaire about offering compromises. Do I qualify? Well, you can go through that questionnaire. It's very few questions, and if you don't qualify, don't even attempt and spend the money. But if you do qualify, it is a way out.
So the option is there, but not for everybody. So.
Yes, it's not for everybody. Just because you owe money, you think you can negotiate. No, they're going to wait you out. They're looking at it over a long period of time. They're not in a hurry to settle. They like to settle, and they want to get as much as possible. But as I said, if you're 30 years old and you have a good job, or you just lost your job, they might not settle. They're thinking, well, over the next 10 years, you're going to be making money. We're going to get some of the money.
We'll be here.
We'll
be here.
Yeah.
What do you have to do to end up in debtor's prison, as they used to call it? IRS, go to Kansas and go to the federal prison.
Well, I was reading a report years ago that the story about the somebody's house being taken away. The IRS loves news articles and stories like that. If there's one or two a year, it scares people into being compliant in their tax returns. They want people to, file the returns and be honest about it. So when there's a really negative story about the IRS being tough and being cruel, the IRS kind of likes that because it makes people more compliant. Overall, though, IRS agents and people I talk to are just everyday people. They're bureaucrats. They're easygoing. They have a family. They're just, following the instructions in their manual. They're not evil people, and people are scared to death. There's no reason to be scared to death of them. If you just work with them, a lot of times somebody will come into the office and they owe $50,000, and they owed it 5 years ago. And I said, well, they got a lien against my house, and they're garnishing my wages. Well, all the IRS wanted was you to talk to them, and if you start ignoring them, they're like any other creditors that come at you a little bit harder. If you work with them and talk to them, you can set up a payment plan. They're happy. And, setting up a payment plan is fairly easy. You can actually go online now and set one up. And if you owe $50,000, they want you to pay it back over a 6-year period and take 72 months into $50,000. And that's your monthly payment they're looking for.
Just thinking about a nice car.
Yeah.
Look at it that way.
As long as you're talking to them, they're okay. And if you can't make your payment, if you need to make a lower payment, they will take that. But you have to prove you can't make the payment. You can't be living, driving a Mercedes-Benz, have a $1,500 a month car payment, living and have a house with $500,000 of equity in it, and say, "Oh, I can't make
money.
I have no money." They'll look at your financial history and they'll pull records and see what you own.
Again, we're speaking with John Harman. McKinneyTax.com is the website. 469-742-0283 is the phone number. McKinneyTax.com sounds easier to remember if you're driving. You seem like you're really into it. What drove you to get into the tax field?
Well, there's two pieces to this answer. One is when I was in college, I wanted to be a dentist. That was my major. In my first semester, I took biology and chemistry. I hated biology and chemistry. I decided there's no way I'm going to go through 4 years and get a degree in science. I was good in numbers. I wanted to be a math major, but after my first math class, I decided the math in college was totally different from the math in high school. So I went back to the simple math, accounting. Is adding, subtracting, some division, and I started studying accounting. But thinking back about it, I came from a poor family. My mom worked as a clerk in a drugstore. She's a single mom. And when I was 9, 10, 11 years old, I would stay in a drugstore in the back, and while my mom would be working up in the front. And there's a person that come in at night, and he would do the books for the drugstore. And it's the big old binders, the ledgers. He's sitting in the back on a card table, smoking a big cigar, and doing, putting in the manual entries in pencil in the ledger. And I sit back there and I'll talk to him. And I think probably I didn't really talk to him. I just bothered him. And but he tolerated a kid back there. And so I looked, and he was an accountant. So I wanted to be kind of like that. But of course, accountants aren't like that anymore. They're not in the back room with a big cigar and making entries in pencil in a book. We're a lot more sophisticated than that now.
Well, that's great. You found something that worked for you. You didn't have to take all those science courses. If you were to give some advice to someone who is just starting a business, other than the LLC, anything in particular come to mind about mistakes to avoid?
I think one of the mistakes is you're trying to figure out, how am I going to make money? You might have a good idea, but can you make money from it? And that's going back to a person who says, I can make good cupcakes or I can make great cookies. Well, do you have a plan? Who are you going to sell it to? Well, I can sell it to the public. Well, you need to start selling some. And then once you get started, then you'll see better ways to market. You see better ways to manufacture and bake cookies. You might set up a little 2 or 3 ovens and start making a lot more cookies. But you need to get started first of all.
And see where your best return on investment is coming in. Now, for everybody, this is John Harman. We're speaking with CPA. If you need any new tax strategies, you know about the new tax laws that have come in, but you don't really know the new tax laws that have come in, and you need to know how to do the best you can with the money you have and how to save as much as you can, give John Harman a call, 469-742-0283, or just look up McKinneyTax.com. Thank you, John, for coming in. And you're listening to Ask the Experts radio show. I'm John Wolf on Talk Radio 1190.
Thanks for having me, John.
CPA John Harman is proud to be selected as the top CPA in Collin and Denton counties by the Ask the Experts radio show. Harman has been a practicing certified public accountant for over 30 years. He's developed new tax strategies for the new tax law. Harman has a new tax strategy that taxpayers who are owners of an S corporation or receive K-1s over $200,000 or have 1099s over $200,000, significant savings for 2018 beyond their current strategy. You have to act quickly in 2018 to take full advantage of these new tax strategies. His firm offers services in personal financial planning, IRS representation, small business accounting, bookkeeping, tax planning preparation, payroll and accounting services, business plans, and new business startups. John Harman, with his years of experience, can give you peace of mind knowing your business is in good, experienced hands. So see why so many of his clients think he's the finest CPA in Collin and Denton County. Call CPA John Harman today for a free consultation so he can show you how he can help your business or you personally. 469-742-0283 or go to John's website at McKinneyTax.com.